Good morning, everybody. Welcome to the Flow Show. A new week, full-on week for me after the short week I had yesterday. So I hope you all have a good week as well. Morning, Kay.
Good morning, Ryan. Good morning, everybody.
How you doing? All right?
Yeah. Good weekend.
Yeah. You're now on the wagon, aren't you?
On the wagon, meaning?
You're off the. You're having a little bit of a health kick.
Yeah. We decided to have like a couple of weeks of a dry weeks and a bit of a diet. Let's see.
Yeah, I think I might join you. I got on the scales yesterday and it wasn't happy reading. So yeah, got to get fit for the summer, mate. Get those beach bodies back in shape.
Exactly. The scale was thinking there were two of you on it.
Yeah, someone was standing behind me with their foot on it, I think.
Yeah, exactly.
Anyway, at least it could still count up the right amount of numbers. Anyway, right, let's get stuck into it. Quite a few headlines to get through. Overnight, over the weekend, the PBOC left their MLF rate unchanged there, but they did inject the lowest amount of money into the system in April, the smallest since November. So possibly this is the bank taking a bit of a step back and seeing what previous moves to monetary policy, like the RRR move that we saw a while or so ago, just seeing what's happening to the economy and the flow of monetary policy is doing through that. So that's what analysis is saying, that perhaps it's taken a bit of a step back, not easing further. Over at the Bank of Japan last week, Assistant Governor Shimizu said that the BOJ deems it necessary to conduct monetary easing, support the economy, and provide a favourable environment for firms to raise wages. So singing off the same hymn sheet as the boss man. Speaking of the boss man, he's going to be in Parliament Tuesday, so that'll be sometime late tonight to early tomorrow. Press in Japan, I'll never get the name right. Gigi, is it K? Gigi?
Yeah, the GG news, yeah.
Yeah, saying that the BOJ will consider CPI projections for fiscal year 2025 between 1.6 and 1.9%. That's obviously below their target for what they want to get to, obviously 2%. So still setting things below that magic 2% line going forward. We'll have to see how the data develops on that front. In Australia, Treasurer Chalmers says they are looking to release the RBA review in the next week or two. There's quite a few central banks looking at their policy frameworks with their central banks to decide whether they're going to change the mandates and how they view things, look at things. Altogether, it shouldn't be anything shocking from a lot of central banks. The BOJ are potentially going to be doing one as well. But there is a bit of a chink of light to maybe getting something that we didn't know already, or they changed something. It's a bit like when the Fed moved to their average inflation targeting. They made that part of the framework of the bank, although that seems to have disappeared off the face of the planet since inflation ballooned. So yeah, next week or two for Australia to do that, and then say the BOJ have one coming up potentially as well. Can be a bit of a mover if there's any big changes within those policy frameworks and what the central banks have to do thereafter. Over to New Zealand, and more inflationary pressures due to the floods and the cyclone that happened. Food prices in March were up a good chunk, particularly for fruit and vegetable prices. So that's going to have an impact, economists say, on the first quarter inflation data due this week, which potentially will keep the central bank on its policy tightening path, i.e. further hikes from the RBNZ. So something to keep an eye on for that. Over in the Eurozone, and Lagarde last week said expects Eurozone inflation to continue to fall as lagged price pressures fade out. The outlook remains surrounded by considerable uncertainty, and risks to the growth outlook are tilted to the downside. Another flood of ECB bods coming out with their rate calls. ECB Simcus says ECB are not done on raising rates. May will be 25 or 50 BPs. The size of the hike will depend on the data. Seeing inflation is falling on energy. Core inflation is expected to peak next month or shortly after. ECB's Nagel continuing on the hawkish slant. ECB's job is not already or even mostly done. More rate hikes are needed. Inflation risks tilted to the upside. It's not a given that inflation returns to target over the medium term. ECB's Ren, he's one of the hawks. ECB must carry on and act consistently with rate hikes. Centino, one of the doves, said the ECB should slow or pause rate hikes in May. Kestrel Kazakhs says the ECB has the option of 25 or 50 pip move in May. And then Reuters were out with a piece, sources piece on Friday, saying that ECB policymakers will call for a full halt to reinvestments of their APP in the second half of the year. Probably a lot of that's been expected. Anyway, over to the Bank of England, and Tenrero says we're yet to see most of the impact from rate hikes and we need to be patient. SNB Jordan says he cannot exclude the SNB needing to raise rates again. Over to the Fed, and Fed's Goolsbee says he doesn't want to comment yet on what he's picking for the May meeting. Still wants to see the data. Tighter credit conditions can help do the Fed's job for it. Need to keep an eye on the price series, not wages. Fed's Waller says recent data shows the Fed hasn't made much progress on its inflation goal. Rates need to rise further. The extent of further increases depends on incoming data and credit tightening. So all taking the same line, looking at this credit tightening stuff, and obviously the data. Monetary policy will need to remain tight for a substantial period and longer than the markets anticipate. Going up north to the land of syrup and beavers, BOC's Macklem says BOC officials discussed the need for a potential hike at the latest policy meeting. It's a bit of a hawkish tilt there, and says it's far too early for the BOC to consider rate cuts. Now, we did have a ton of data out on Friday, so we will start there first. Obviously, the big data was the retail sales in the US, which came in worse than expected in pretty much all the components. But strangely, we didn't see the same reaction selling off in the dollar. It blipped that way initially, and then completely went the opposite way. And as you'll all know, we saw the dollar gaining through the latter part of Friday, and has done a bit more overnight as well. So retail sales coming in much worse than expected across the board. Industrial production came in better than expected, so a bit of positive numbers coming in there for March in those. And then we got a little bit of a shocker from the Michigan numbers. The headline number coming in better. That was all well and good. Components as well, conditions better as well, but the 1 year inflation number, a big jump, 100 points to 4.6% from 3.6% prime, 3.5 expected. The 5 year inflation expectations came in unchanged in the end at 2.9%, but that big jump in inflation expectations really helped feed into the Fed narrative that they've more work yet to do on inflation. And as we've seen that from the CPI report as well, those core numbers. So really a bit of a switch around, as we say. What did you make of that on Friday, Kay?
Yeah, that's really Okay, I can see two things now that has settled a little bit. Is that we have been selling that market well, and we probably as well had been selling dollars for the whole week. And on Friday, I think some bigger accounts decided it was time to take profit on on quite a few things, under which the bond market. I think the core must have been what triggered it. But then it was very strange, because then we had this yield move. I think the short end did like nearly 15 BPs, and the tens did like yeah, the short end did actually 15 BPs even on the retail sales, which was a bit strange. I think it was rather just an excuse to start taking profits, or you know how we are, and what I've seen over my career, somebody already had those numbers coming out afterwards, and forced the market a little bit. But let's keep it to the fact that the market may have expected even worse numbers, a give back of better than expected numbers earlier this year. But yeah, I found it a pretty big move, to be honest, in the bond markets on the back of that particular retail sales. But then, of course, it was fueled by the surprising again Michigan numbers, which were not only higher on the inflation expectations, and even the 5-year remaining sticky, but also on the headlines were better than expected. So we were really in a phase for a week and a half, where some of the US data started to show weaknesses, right? And then first of all, it was countered by the first number, the NFPs, but that finally did not really get the dollar going. We printed the lows in the dollar afterwards on the Thursday. But then, yeah, I think it's more a case of the market saying that, well, perhaps not everything is falling out of bed yet, so we need to big price again. And it seems like we are in a constant repricing of expectations on whether it be the Fed or other central banks. And I think we are going to see the same going on for the next, what is it, 2 weeks, 2.5 weeks, until we get news from the Fed, the ECB, and then the rest of the central banks. So we had this also all those comments that we had during the G20 of finance ministers, the central bankers were at the World Bank and the IMF, so we had a slew of comments, and it's all very much we don't know. The decision has not been taken on what we will be doing next. So, and that's putting the market a little bit on the in the unknown, right? So that's why we are seeing now, and I guess we are going to see it on every data point coming out now. There's possible this 10-15 BPs repricing in the bond market, and the dollar will follow. And the dollar will follow. So yeah, it doesn't make it easier to find a theme for the more medium or longer term. I think we are still going to be in a market that is going to trade day by day. There are a few underlying themes. But I think globally it's going to be tough to really stick a medium-term play on what is going on in the market. For now, we're seeing the dollar recover, and I guess it's going to continue today, tomorrow. But then we are going to have to look at the next data point to see what's going to happen, you know.
Yeah, I think the saying "it takes two to make a market" has never been more prevalent than it has been into the end of last week. You know, we knew that the market was selling bad data, but then it completely bamboozled even me last week. My shorts were looking pretty down at 132s. I'm ruined not taking a bit off now, but we can't trade backwards. But yeah, I think that there's a good battle going on. There's enough in the market who want to trade a Fed going back to easing or rate cutting or stopping hikes or whatever, but there's still plenty in there who are going to buy it up on good data on the other side of the coin. So I agree with Kay. I think we're going to see this boat swinging, or as we like to call it, running from one side of the ship to the other, far more regular between the data points.
Yeah, and I also and I asked in the chat just a couple of minutes ago. I'd like to see or like to have an idea on how the volumes are right now, because I'm not sure that in the last week and a half the volumes were that heavy. I think the FX in the FX market I'm talking, right? I'm not talking about any other markets, equities or bonds, but I'm not sure that we are in a high volume market. There's a lot of repricing going on, so we will see spikes in volumes, but I think the overall volume, I'm not sure if we are in a high volume market, but rather a market which is constantly trying to find its way. Yes, the dollar yen is higher again, and the euro dollar is lower, and the cable is lower, and Aussie Kiwi. So the dollar regained some strength on the back of some data, but then the rest is a bit like an open question, right? So I'm not sure the volumes are very high. I'd like to see it. If any one of our listeners or viewers has an idea where we can find the volumes, that would be great. But I'm not talking about the retail traders volumes, right? We are like 5-10% at best of the market. I want to see real volumes.
Yeah, no, agreed. Well, let's take a look at some of the other data, because there's been a few bits and pieces out as well, especially coming into this morning or into today. So there was some Italian CPI data out this morning as well. And again, you know, these were final numbers, so confirming the drops that we'd seen. Big drops again. We'd seen those in Spain, and Italy was one of these countries that had seen inflation picking up the last month or so. So that's had a big reversal. So that's making those rises that we saw in there in other countries a bit of a one-off inflationary impact there. Still running at very high numbers, obviously 7.6%, 8.1%. So, you know, long way to go yet, as the ECB keep telling us, but moving back in the right direction for some of those countries as well. Looking at the calendar this week as well, not an awful lot coming on in the calendar this week. We do get the first of the manufacturing data of the new month. Today is the, well, I'm checking that actually. Have we got the Empire today? I can't see it on any of the other calendars. Where are we? Is the Empire today? Yeah, I'll have to let me just double check that. Where are we?
Which number are you looking at?
The Empire States.
Yeah, it's coming out today.
Oh, it is coming today. Oh, I'm in the wrong part.
1:30 our time. It's on there.
Yeah. So that's the Empire State as first manufacturing data of the new month there. So we'll get the Philly Fed will be coming up later this week as well. Where is it? I can't even find it.
And
where's the Philly? There we go. Thursday.
Empire State, yeah, that prior Empire State number was a bit of a shocker, right? Was very weak, yeah. and kind of set in this move on the dollar, because then we started to talk about, hey, the numbers are starting to be a bit weaker, and that was a little bit of a shocker. And if I recall well, it was a bit of a mover, the last one that came out. So yeah, exactly. we do have to pay a little bit of attention to that.
Yeah, and we've got RBA minutes coming out, and then we've got some Chinese data, retail sales, GDP, that sort of thing. So we'll probably get a further idea of how China's doing since the grand reopening, as we're calling it. UK jobs tomorrow as well will be interesting to see if there's any changes in there. German zoo survey and Canadian CPI later on. So a few bits and pieces there for us to get our teeth into. UK CPI, PPI and that's the final number, I think, for HRCP in the Eurozone. So catch up there. Then we got that Kiwi CPI number later on Wednesday. They'll play, as we said, into RBNZ thoughts. A bit of PPI from Germany on Thursday. Eurozone consumer confidence flash number there. Never one to really worry about. Then we start getting a bit of the housing numbers coming in from the US. On Friday, we have Japan CPI. It's probably the pick of the bunch out of that lot. UK retail sales, and then we start getting the flash PMI numbers for April coming in on Friday as well. Canada retail sales as well, and then that US S&P Global flash PMI numbers coming in there. So a few bits and pieces to keep us entertained this week anyway, but no huge big ticket data apart from that Japanese CPI number. Perhaps that's going to be pretty good, pretty big for the Bank of Japan thoughts coming in on the 28th. I think their next meeting is. So that's what we're looking at this week anyway. Coming back to prices, and you know, it has been a bit of a mess. If you look back at dollar yen, what's happened during the past week, what happened on Friday, it is looking a bit messy. Again, it's one of these situations where you can't marry a trade for too long. You've got to take the profit while it's there in case you get these big reversals. Overall, we're nudging up into this former area in the 134s that we were watching previously, very sticky area. We couldn't break out this box. We had to move down to the 127s, got back up, had a little bit of a go before we did make a move up to 138s, but that didn't last long, and then we went back in the box. So this is a bit of a traffic zone up here. Quite a bit of tech confluence coming in around this 134, 30s, 50s area. We've got the top of the daily cloud sitting around there as well. We've got this uptrend that I've been keeping an eye, half an eye, very short term thing, but it's a bit of a break for this from this move. It keeps a steady uptrend in play at the moment. The top of that comes in right in that zone as well. So if dollar yen's going to continue this move, it's probably going to need a little bit of a help from yields as well. Despite me being short, I have been warning that I'm expecting that there is potentially some upside in this, particularly over the Bank of Japan. We know UEDA's been pretty much singing off the old hymn sheet, so that's going to keep the upside in favour for that. But we'll have to wait and see his first meeting to see what he actually wants to do. But this uptrend is, I think, needs respecting for the moment. It's going to need a breakdown through this 131 area. I think if we break that, then that's going to change the trend perhaps and knock out this uptrend. But in the meanwhile, what it doesn't, we need to be looking at the top side. If we do get a break above this area, we're probably going to be heading for 135 not long after that. So keep an eye on that. The next level is up 135, 30-ish, around that area. So that's next level up there. If we get above there, then maybe we're heading even further. But as Kay's been mentioning, we are going to be data dependent. So any slew of bad numbers out of the US, and we're probably going to be heading all the way back down, and yields are going to get smacked again. But good two-way markets at the moment, enough there for everyone to pick up a side. Euro dollar, you know, thought we were getting a decent break above here. It looked like it was breaking, but it hasn't lasted. So, you know, it opened the door a bit, but we're back below. And the fact that we closed back below is significant. That's going to reinforce this area up into the 110-110.30s again. Where are we going to find support? We're finding support, a bit of a break point here when we had prior resistance coming in around the 109.60s. That's where we're sort of finding a bit of support. It's going to be down here though into 109s, the lower 109s, where the bulk of support is probably going to be. If we get under there, we're heading back towards this old pivot zone, and then maybe we're going back even further. But if we do find we've got a bit of a bounce down around these low 109s, then that's going to keep this trend in play that we've had throughout March. So even though it's been a fairly decent move off this high up here, it's still not out the game, and we could go either way. What are your thoughts on the euro K at the moment?
We're talking about it this morning in a little bit in our chat room. It has rejected, but then if you look at euro crosses are still less so this morning. If we look around, but the euro crosses are still bid. So because there's still this thing in the market that's going on, thinking that the ECB will hike possibly another 50 BP. So there's a bit of rebalancing, can we say, going on still around the euro. So for the euro dollar, it's a bit of a strange or not an easy call for me right now. I've got very little positions in the euro dollar. I prefer, if I trade dollars, I'd rather trade different ones. But yeah, we rejected the move above 110 and the move above the prior high. And we need to respect that. But as you say, this, and I've got something, I think it's around there, 109.30. As long as that holds, I reckon the euro dollar is still, the up move is we have to consider it as intact. And this just being a setback. But it seems that we are finding it more back on the euro crosses again than what's happening on the rest. So for the euro dollar, I'm relatively neutral, but acknowledging this 109.30-ish level, that if that holds, then there's still this chance of ultimately going into the 112s.
Yeah, no, I agree with that. And euro sterling is another one. It did nick up to these highs again, this former area at the 88.60s. Found it a bit of trouble, so got a potential for a double top to form here. If we need a move above this 60, 65, 70 area, then that'll give us a crack at 89 probably thereafter. I'm still sitting in long to this. I'm toying with getting out some of my 88s exposure, just to put some in the bank and look to reload on the dips again. Still fancy the upside in this, but it's not going to any great lengths at the moment. Still sitting in this sort of 87, 89 range that we've been in for quite a while. And I don't see any reason why we break out of that. Sorry, mate.
Ryan, if you put a trend line from the last highs there, right, 89, 80, or 90 or so, over the next high, you will see this trend line coming in right where we are now. And it's a bit of a channel on the euro sterling going on there. We tried to get above this morning, but it seems to start to fail this one. And we can actually, there's a line nearly parallel, not completely parallel on the downside as well. It looks like we have been in a bit of a channel to the downside, and now we are retesting the top of that channel. I must say that fundamentally, it's probably flows going on, and the market not really, how shall I say, not having a lot of confidence in what's going on in the UK, perhaps with all the strikes again going on. But for the rest on the fundamentals, I don't really see why right now we should break out of that range, or why sterling would really have to be weaker than the euro, unless it's all part of that big ECB play.
Yeah, exactly, and that's why I'm thinking about taking some of my low 88s off, just putting some in the bank, because if it's not being driven by the fundamentals, then I might as well just take some profit on the table and look to play the range, stick to the edges, and do the old rinse and repeat. Ali, that was a great trade on your euro yen last week. Hope you put plenty in the bank on that one. A nice run to the upside. Cable, quick look at that. We're just still mooching around the 124 figure. Again, another little failure, a bit similar to the euro dollar. We had this break above the prior high 125s, got up near 125, 50s, and then we've flummoxed all the way down again. Again, you've got to always bear in mind that the cable tends to move more than euro dollar, which can also be another influence for euro sterling. So if euro dollar's moving 20, 30 pips, cable's probably moving 40, 50 pips. So that always can have an impact in euro sterling as well. I'll let Kay have a look at this one because he's probably having a more detailed analysis on cable at the moment. I really haven't fancied trading cable for a while. You know, cable's one of these ones where you get a big move and you think, oh, it's done 500 pips. You know, that's probably enough. And then it goes and does another 500 pips while your back's turned. But this one, for some reason, I'm not interested in playing it at the moment as a dollar pair.
Yeah,
Aussie dollar. Yeah, go on, mate.
Yeah, I had a decent little nibble at it in the cable on the way up, actually. And
yeah.
That's why I feel quite fortunate not to have been involved in this move from 125 back down to under 124, because I didn't really see, apart from some dollar strength, of course, I didn't really see the real reason for to be short sterling, actually. But yeah, there's a couple of shorter term levels there, and you have that one there around 124. 40-50 has always been a bit of a crossroad in the short term on the cable, and we've been turning around every time we get through it. It seems like a bit of an accelerator on the short term, and then the market reassesses what's really going on.
Yeah, I'll probably do a bit of cleaning up on my charts there, so that gives me a job to do. Yeah, I was going to look at Aussie dollar. Had a failure at 88, which looks quite significant. Right now, you know, we had one attempt to get up close to it. Again, similar, had a little move above prior highs, and when that happens, it gives the impression that we're off to the races and maybe we're going to be breaking up. But like we've seen in other pairs, it hasn't lasted, and boom, we're all the way back down again. So if anything, when you've got these markets where 1 minute you're looking at one direction and then it changes in an instant, you've just got to learn that these are the levels that are developing. You know, for whatever happened up here, the price didn't get through. That is going to solidify, because all the sellers that are coming in here are going to start parking their stops above these areas. So if you get up here, you're going to find again probably a lot of sellers. But if you get a swift move up from here, so let's say the next few sessions or whatever, we get another quick move back up to here, that's going to increase the chances that we do get a proper break. So, you know, if you weren't short up here, fine, you can have another crack if we get up here, but perhaps you do a bit less risk and you look to turn it around if you get a break above 68 now, because that, as I like to say, too many knocks on the door, and one day the door will open and off we go. Same for the downside. You know, we've got this bit of an area here down towards 66.80. It's a bit wishy-washy. Again, it's another one of these zones where the price can mess around in it before deciding what it wants to do. Sometimes it will break under, sometimes it will hold as support, and that gives you your area maybe to try a trampoline long back up towards those highs. So you never, when you're playing two-way markets and you haven't got a bias and you don't know which way a pair's going, just trust the levels. Just pick your levels and trade the levels. They will tell you whether you're right or wrong, and they give you somewhere to put your risk against. You know, it doesn't matter what your bias is. That's a technical level at 68. You trade it or you don't trade it. The same for the downside. You find your levels. It doesn't matter what your bias, doesn't matter what you think about the Australian economy. From a technical standpoint, that's an area where the price may do something. It's either going to go all the way through or it's going to hold there and bounce. So that's where you split the text from the fundamentals, particularly when you don't know what a market's doing or where they're going. One pair before I hand it over to Kay quickly, and that's dollar yuan again. Pretty much the same as the dollar story that we've seen elsewhere. It was heading lower, and then it's reversed back up to, let's call it the mean, this sort of 86, 88, 89 area. Back in this mini box that we've been seeing here. I didn't do anything down here. I was waiting, hoping we might get a move down to the 80s, or at least those prior lows, to maybe look at some longs. Wasn't to be, so I'm back on my hands, waiting to see what happens. Keeping an eye on this bit of a zone up here at 691s, 92s. That's the gateway probably to a move to 7s. So a decent range to play here, but we're bang in the middle of this as well. We have got that data coming out this week from China, so maybe that gives us something to trade. But otherwise, sitting on my hands on this one. Kay, do you want to take a little look around?
Yeah, sure. Yeah, I'm actually curious as to what's really happening in the Chinese yuan right now. Yeah, let me grab the screen. I've got something different on the screen, but it's a bit of a really bit of a question mark for me, I must say, because we always come back to this 687, 85, 90 zone without really being able to break above, and I'm quite interested. That's why I was asking about volumes and stuff, but I see that Magic's already put some charts in our chat room. So for the people, just to remind you that it's one of the most active chat rooms in the market where there's real comments in there, and people always try to help each other. So if you're interested, give it a go. It's only $1 for 10 days if you want to just try it out. But really, there's a lot of interesting discussions and information coming in there. So yeah, about this China thing, it's always around there, and then I'm not sure whether the market is really trading volumes or it's very light right now, and just wondering what's going on in the Chinese market, because we had the PBOC holding their hands still, where we could have expected a rate cut, but then if you look at dollar CNH, it barely moved. It's a bit of a strange one right here and now. I'm just looking at Horatio's question: can the CAD be supported with the prospect of higher oil? Even though, yeah, I think it's already been the case, Horatio. Higher oil and data holding up, right? We had this labor report coming out, which was pretty decent again in Canada, and then of course the higher oil is also supportive for the Canadian dollar. But there's been a bit of tech going on as well. I'll have a quick look at it. So for these, what I always look at is these short-term differentials between the euro rates and the dollar rates. And as we can see, this is I think our first move somewhere up at 110 or here, and then we had another jump, and then that's our last week's jump. And you can see that we did the top on Thursday, Friday there between the differentials. So the tightest differentials that we had in quite a while, if you look at it, because here we're already going back to November 2021, and we are at tightest levels since then. So if you want to know one of the reasons, at least, why the euro dollar has corrected, look no further. This is what was going on there as well. The differentials between interest yields have been tightening quite a lot as well. Can we go further? Only the future will tell. I think it's up to ECB and FOMC really to tell us where the next big move in this one is going to come from. Let's have a quick look on the stuff that has corrected into that, especially Friday, right? There was a bit of a possibility for gold to reach up to 2060s, but we failed just before, and we've already retraced to the first support level here, just below 2000, around 1992, and it held. So if you want to have a first market there on gold, 1990, 1992 is your level, and then below there, I'd say the 73, 78, where this triangle expired or matured, or how do you call it? That should be another resistance support. Sorry. If we go back above, keep an eye on what's happening in the 2030s. That's likely going to be a decent resistance, if this is going to be the temporary, at least, end of the move. But nothing is sure in this market. It's also depends how much more appetite the Chinese and the Russians have to load up more on this. But anyway, interesting levels, not too far from where we are. Silver, a bit similar. I highlighted this, I don't recall exactly when, but this zone here where I took some off as well. People in the room know, took some of my silver loans because this is an interesting bit of a traffic zone here. We stopped inside and now we are trying to correct. Ideally, I would look for corrections down to these mid 24s again to start to reload. It's very possible. Silver $1 is quickly done. And I'm going to be patient again in reloading, just looking at both sides of the coin, really, what's happening first of all to the dollar and what's happening then to yields and the risk markets to see if we get I can get some back in here and also look at the data coming in, because if you get good data, it should be relatively also supportive in some way for silver. But patience. Yeah, euro dollar I was showing there this morning. There's these triple trend lines coming in, and it's all happening down to, I think this one is going to be pretty important here around 109.30 prior top that Ryan already showed as well around here. We're having the same levels there. This is going to be a relatively important one because that would signal the failure of this move as well. But we are already, or we have already tested the first support here around 109.60, 65-ish. So that for the euro dollar, we have to get back above 110, 0510 to get going again. So for the time being, and there's not much on the calendar, we may as well hang around this zone and then see what the states want to do with this. I'm not a big fan of having positions in the euro dollar as such, because even with divergence, possible divergence between ECB and the Fed, looking at the ECB bots lately, I'm not sure whether they really are going to go for 25. So could be a bit of a stalemate in the euro dollar for me in this zone, and people concentrating more on the crosses. Cable, as Ryan also showed, and this one has always been a bit of a crossroad on the cable where it's deciding. You see falter and you do a big figure. You go through, you do nearly a big figure, and it's always like being a bit of a springboard or an area where when it gets through it tends to accelerate. So for me, still in the short term, this 124.40.50 is going to be an area to watch on the cable, and I'm still there's already something going on now in the mid to low 123s, right? 35.45 is a bit of an area, but to me the measure for strength or weakness in the cable is still going to be 122.60.70. We've halted, we stopped again on the level in the last leg higher, and if one day this falters, then it's probably that we are going to trade lower. So this is still my medium term level on the cable. Yeah, dollar yen, just wanted to show the so we have this trend line, but it's only a 2-point trend line. But I told you the 133.80, 133, 134, the figure was already a level. We're turning around, but it seems that we want to go and have a look. This market wants to go and have a look at least at the top of the daily cloud, which is at 134.47 today. So that's going to be your next level to watch, and probably important on a close. And if you look at how clouds can be important, you see here we tested and the close stay inside. Here we go, we get through and the close is below, so we had another leg lower. And And then the last couple of days, if you see, the close was bang on the bottom of the cloud. And if you start to move higher, it's usually a signal that the Japanese accounts feel comfortable still trading around the cloud. So I think it's still valid right now to keep an eye on what's happening around the cloud, knowing that this little trend line here is trying to give way now. And if that gets confirmed, why not ultimately see a move around 137? But there's going to be a lot of uncertainty in the yen, right? We're still trying to figure out what kind of guy Ueda is. There's a lot of opinions saying that it's going to be very, very slow, which is my base case, but we will see some normalization. But other people and people even in Japan are thinking that he may already start to announce at least something for the end of the month. We're having the Bank of Japan meeting results on the 28th, if I'm not mistaken. So ahead of that, we can't exclude some speculation on the yen. Perhaps some yen buyers coming in, or at least people who are short yen getting out of positions as well. So I expect a bit of ping pong into the end of the month on the yen pair. So be a bit careful. We can get a little bit volatile there. On the euro yen, as I said already, it's positive. We retested those break levels and held last Wednesday, and it's moving higher. We could be moving back to those 148s. Again, if you look at the trend line, we could be on our way to 150, but is it really going to have enough strength before the Bank of Japan meeting? I'm a little bit long. I'm an in out. I'm a little long, but it's really a small position, and I will just watch what if those highs here hold. If not, why not? I'm moving out of it. But in the meantime, it's still positively oriented. We can have a look at this 148, in my opinion. For the more medium term, this 144.5, 145 is going to be the bigger level, if not here, those 145, 145, 50, 50, 75. So keep an eye on those levels on the downside. And the top side, it's open, it's bid, but I would respect this one until the Bank of Japan. Others, Aussie, as Ryan said, I have got a bit of a, what is this, wedge or so broken here, 67.20 short term. We retested it this morning and failed, so that's your first resistance here, and then the next one lies around the 40. But I think if we get back into the wedge, that should be relatively positive for the Aussie. Until that happens, though, it's weak, in my opinion, weak for at least a retest of the 66.5 zone, and if why not even low 66s. Kiwi is still trying to figure out what it wants to do at 61.90 figure. It's obliged to trade around there every time. Every time it's trying to make up its mind around the 61.90 figure. And now we have a little bit of a trend line here. It's a weak one, but we can see a little bit of channel here, and possibly, and same happens in the Aussie, possibly this being a bear flag or so. So if it breaks, we could see moves back down to 61.5, or why not 61 the figure if the dollar keeps its beat tone. Close above to tonight. Again, similar as in the Aussie, could mean that we are going to be more range trading for now. And my overall feeling is still that until the next Fed, we are going to be in broader ranges than really picking directions, firm directions, that is. A little look on what's happening in the mix. When we failed here around that 1835.40, We now overnight, and it was a bit of a strange one. The opening overnight was well below 18. I haven't seen anything in the news unless somebody else knows what happened there in the mix, why it opened so much lower. But anyway, the mix is still doing pretty well, and being US's neighbor, it's not. Well, to me at least, is not very surprising. The mix is, as I've already said many times, mix is. If the US is doing well, Mexico is usually doing pretty well too. And being an 11% currency, it's tough to stay short mix for a long time. Rand doing it again, went close to 18, and now we're bouncing again. So the first level here is around 18.23. But this is really a bit of a magic channel here. We've broken below, had this acceleration on the SARB 50 BPs instead of 25. But since then, it completely reversed, went to retest the top end, and we are firmly still in this stuff. I have a little bit of short dollar mix versus long dollar rand for as long as this holds, but it's very small, because emerging markets can go very fast, and I'll be a happy take profit seller if we get back to the top end of the range and then see where dollar mix is. By the time at time of speaking now, they are diverging in the way that I have my position, so that's pretty cool. And for today, Brand, wide view on the euro. Wide view on the euro. Yeah, why not? Do I have a wide view on? Yeah, so the wider view, Brand, is that's my 112 here, and the 112 we can find it back also on a longer term trend line, and also, I think in a shorter one, I have it on a shorter chart as well. There's a lot pointing at 112 if this move continues in the euro dollar. So I think that's going to be a tough nut to crack. And in turn, if we break higher, then we should be looking at 116s. All right. Now, for the medium term, if we need to hold above, right now it's around 107. So the 107 is going to be your magic level, I think, on the downside. It used to be around more in the 104s, 105s when we spoke about it, but this trend line has clearly made some way in the meantime, and I think it's going to be 107, the more medium-term level on the euro. And Ryan, that's it for me, my friend, for today. Unless Sterling Cat, Aussie Cat, I don't know. Horatio, Ryan, do you want to have a look at Sterling Cat and Aussie Cat? Because I really don't have too much of an opinion on that one. I can show you the dollar cat because the 133 is interesting there. We've got a lot of little levels coming in there around. Be anywhere between 123 and 122.60, or call it 80.60. It's very interesting on the dollar Canada. It could be enough. I know we rebounding already a little bit thanks to the dollar, but if we ever retest there, keep an eye on what's going on in this zone there on the dollar Canada. Okay, and I think it's interesting enough. Top side 134, 133.90, 134. 05, 10, 05. That's your first resistance on the dollar cat. I give it back to you, Ryan.
Thank you very much, mate. No, I've not got much view on any of those pairs. Let's have a quick look, see if I've got anything going on. Aussie, let's get the
take the chart. Mate.
Yeah, 2 ticks.
Okay.
Okay, isn't that okay?
Yeah.
Yeah, so Aussie CAD, we've been mooching around this 61.8 fib. We're now below it. So if you're looking for a marker, that's pretty much where you want to be looking at. We're holding below or looking to try and hold below this level here, 89.60s, give or take, and these prior lows. So if we're back above there and holding above there, then potentially we're looking at further upside. But it's pretty much looking the opposite of the Aussie dollar chart. So obviously you've got to factor the dollar side of it into things as well. So it looks a bit of an inverse play on that one. But as far as your level's concerned, yeah, above that 89.60s, if it starts to build support there, we're heading higher. But while we head below, or while we hold below this area, then potentially further downside is coming into play. And where that goes is anyone's guess. A bit of an open trapdoor, if you like, down to maybe this 88.70s area down there. So that's my view. Not that I look at it that often, as you can see, this Aussie CAD, but yeah, that's what you're looking at. Go with the flow, as we like to say. And we shall leave it there for today, folks. Thank you very much, everybody. Let's hope you have a great week ahead. Many pips to be made, and I hope you make them. And thanks, Kay, and we shall see you all bright and early tomorrow morning.
Have a good day, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.